The federal government is sitting on money that belongs to you, not because of a mistake, not because of an investigation, not because you did anything wrong, because the form that releases it was never submitted. Among seniors who qualify for specific refundable tax credits and do not claim them, the average unclaimed amount is $4,873. That figure is not a projection or an estimate. It is derived directly from IRS data measuring the gap between seniors who qualify and seniors who actually filed the correct paperwork to receive what they are owed. This is not hypothetical money. It is money the federal government has already determined you are entitled to. The IRS will not mail you a check for it unprompted. The IRS will not call. The IRS will not send a notice explaining what you left behind. The system is designed to wait. And if the correct form is not filed within a 3-year window, that money does not roll over. It does not sit in an account with your name on it. It is gone permanently, absorbed back into the treasury. This video exists so that does not happen to you. If this is your first time watching, subscribe now. Every week on this channel, I cover the tax rules, refund mechanisms, and government programs that directly affect seniors and retirees, in plain English, with no product to sell and no agenda beyond making sure you keep the money the law says is yours. Before we go any further, I need to address something directly because right now, 2 different groups of people are getting ready to dismiss what I'm about to tell them, and both groups are making a mistake that will cost them real money. The first group files a tax return every year, maybe with a professional preparer, maybe with software, and they are thinking, if I had unclaimed money, my preparer would have caught it. That confidence is reasonable. It is also frequently wrong. High-volume tax preparers during filing season are processing hundreds of returns under deadline pressure. They apply standard forms, standard deductions, standard credits. The refundable credits available specifically to seniors, particularly those tied to the interaction between Social Security income, pension income, and the new senior-specific deduction structure that took effect in the 2025 tax year, require knowledge of provisions under the One Big Beautiful Bill legislation that many preparers have not yet incorporated into their workflow. The credit is real. The form exists. And it is being missed on returns prepared by professionals right now today. The second group has not filed a tax return in years. Their income is primarily Social Security, and they believe that because they owe no federal income tax, there is nothing to file for. This belief costs this group more money than any other single misunderstanding in the senior tax space. Refundable credits are not like deductions. They do not reduce a tax bill you already owe. They work in reverse. The government issues you a check, but only if you file the form to claim it. Zero tax liability does not disqualify you from receiving a refund. It has nothing to do with it. Not filing because you believe you owe nothing is the most expensive assumption a senior can make. I am going to speak to both groups throughout this entire video. No one watching should reach the end thinking this does not apply to them. Now, why doesn't the IRS just send this money automatically? The mechanism is not complicated, and once you understand it, you will likely find it infuriating. The IRS processes returns. It does not proactively calculate what you would have received if you had filed differently. It does not model what you would be owed if you had filed at all. Its mandate, as defined by Congress, is to collect taxes and to process refunds that are claimed. The critical word is claimed. The refund system only moves in one direction. Money flows out when a valid form comes in. If no form comes in, nothing moves. The industry that surrounds you has no incentive to fix this. The tax preparation business generates roughly $14 billion in annual revenue. A senior who discovers they can file a straightforward form or amend a prior year return and receive nearly $5,000 directly from the IRS does not need a paid preparer to accomplish that. The complexity of the system benefits the people who charge to navigate it. The simpler the path appears, the less value the intermediary provides. And here is the specific reason 2025 and 2026 are the years that matter most. The IRS allows taxpayers to file an amended return to claim a missed refund for up to 3 years after the original filing deadline. That window is a hard cutoff. A senior who qualified for a refundable credit on their 2022 tax return and never claimed it has until the 2025 filing deadline to amend and recover that money. After that date, no extension, no exception, no appeal. The window closes permanently. I have spent decades studying the federal tax code with a specific focus on the provisions affecting retired Americans. The credits, the elections, the filing thresholds, and the refund mechanisms that are technically available to millions of seniors and practically claimed by a fraction of them. The situation I find most difficult in this work is not the senior who made an error on a return. Errors can be corrected. The situation that costs seniors the most money, year after year, is the senior who never filed at all for a year in which they would have received a net refund, because they assumed that owing no tax meant there was nothing to gain from filing. That assumption is wrong, and the cost of holding it is permanent once the 3-year window closes. Here is what we are covering in the next 20 minutes. I am going to walk through the 4 primary sources of unclaimed refund money for seniors, the specific forms, who qualifies, and the exact steps to claim each one. Then I will add 2 bonus sections, one covering the amended return process for seniors who missed these credits in prior years, and one covering the free filing resources that make submitting a corrected or late return completely cost-free for most people watching this. Every credit and form I reference is publicly available on IRS.gov. I will give you the exact form numbers. There is nothing here that requires a paid intermediary. Refundable credits are not like deductions. They do not reduce a tax bill you already owe. They work in reverse. The government issues you a check, but only if you file the form to claim it. Zero tax liability does not disqualify you from receiving a refund. It has nothing to do with it. Not filing because you believe you owe nothing is the most expensive assumption a senior can make. I am going to speak to both groups throughout this entire video. No one watching should reach the end thinking this does not apply to them. Now, why doesn't the IRS just send this money automatically? The mechanism is not complicated, and once you understand it, you will likely find it infuriating. The IRS processes returns. It does not proactively calculate what you would have received if you had filed differently. It does not model what you would be owed if you had filed at all. Its mandate, as defined by Congress, is to collect taxes and to process refunds that are claimed. The critical word is claimed. The refund system only moves in one direction. Money flows out when a valid form comes in. If no form comes in, nothing moves. The industry that surrounds you has no incentive to fix this. The tax preparation business generates roughly $14 billion in annual revenue. A senior who discovers they can file a straightforward form or amend a prior year return and receive nearly $5,000 directly from the IRS does not need a paid preparer to accomplish that. The complexity of the system benefits the people who charge to navigate it. The simpler the path appears, the less value the intermediary provides. And here's the specific reason 2025 and 2026 are the years that matter most. The IRS allows taxpayers to file an amended return to claim a missed refund for up to 3 years after the original filing deadline. That window is a hard cutoff. A senior who qualified for a refundable credit on their 2022 tax return and never claimed it has until the 2025 filing deadline to amend and recover that money. After that date, no extension, no exception, no appeal. The window closes permanently. My name is Professor Kyle Pomelo. I have spent decades studying the federal tax code with a specific focus on the provisions affecting retired Americans, the credits, the elections, the filing thresholds, and the refund mechanisms that are technically available to millions of seniors and practically claimed by a fraction of them. The situation I find most difficult in this work is not the senior who made an error on a return. Errors can be corrected. The situation that costs seniors the most money year after year is the senior who never filed at all for a year in which they would have received a net refund because they assumed that owing no tax meant there was nothing to gain from filing. That assumption is wrong, and the cost of holding it is permanent once the 3-year window closes. Here is what we are covering in the next 20 minutes. Step A. Bust the misconception. Most people understand the Earned Income Tax Credit as a credit for working families with children. That understanding is roughly 2 decades out of date. Congress expanded EITC eligibility for workers without qualifying children beginning with the 2021 tax year. The expansion specifically removed the upper age limit, which means seniors are now eligible. Age is no longer a disqualifying factor. Step B. The actual rule in plain English. The EITC is a refundable credit. If the credit exceeds your tax liability, the IRS pays you the difference in cash. For tax year 2025, the maximum EITC for a senior with no qualifying children is $632. For a senior with one qualifying child, including an adult child with a disability who meets the dependency tests, the credit can reach $4,213. With two qualifying children, up to $6,960. The income limits for 2025: single filers must have earned income and adjusted gross income below $18,591 with no qualifying children. With one child, the limit rises to $49,084. Social Security does not count as earned income for EITC purposes, but it does not disqualify you either. A senior receiving Social Security who also earns $8,000 from part-time work qualifies for EITC based on the earned income portion. Step C, both groups. If you have any earned income, babysitting grandchildren for pay, occasional handyman work, online sales, consulting, self-employment of any kind, even small amounts, you likely qualify. The credit is claimed on Schedule EIC attached to Form 1040. If you had qualifying income in prior years and did not claim it, you can amend up to 3 prior year returns using Form 1040-X. If your income is entirely Social Security, pension, and investment income with no earned component, the EITC does not apply to you. Your refund opportunity is in points 2 and 3. Step D, the catch. The EITC has an investment income limit that disqualifies higher income retirees. For 2025, investment income above $11,600, including dividends, capital gains, and interest, disqualifies a filer from EITC, regardless of earned income. This captures most retirees with substantial portfolios and redirects them to the credits below. Step E, one action right now. Go to irs.gov and search EITC Assistant. Answer the 5 questions using your income figures. The tool takes under 3 minutes and gives you a definitive yes or no. If you qualify and have not claimed the credit in prior years, note the tax years and proceed to the amended return section below. Point 2. The credit for the elderly or disabled. The Schedule R credit. Nobody files. Step A. Bust the misconception. The credit for the elderly or disabled has been in the federal tax code since 1976. It was designed specifically for seniors on fixed incomes with limited tax liability. It is filed on Schedule R, and it is one of the least claimed credits in the entire code, not because few seniors qualify, but because few preparers or software workflows ever navigate to it as a standard step. Step B, the actual rule in plain English. This credit is available to taxpayers who are 65 or older by the end of the tax year, or who retired on permanent total disability and receive taxable disability income. The credit equals 15% of a base amount, $5,000 for single filers, $7,500 for married couples where both spouses qualify, reduced by non-taxable Social Security, non-taxable pension income, and half of adjusted gross income above certain thresholds. For most seniors with Social Security and a modest pension, the combination of the phase-out and the non-taxable Social Security reduction has historically brought the credit to zero. But here is what most seniors and their preparers are missing. The new senior bonus deduction under the 2025 tax law changes reduces AGI. Reduced AGI reduces the phase-out. For seniors in the $20,000 to $35,000 income range, the 2025 tax year may be the first year in which Schedule R produces a payable credit after years of calculating to zero. Step C, both groups. If your income is primarily Social Security and a modest pension, run the Schedule R calculation for 2025 with the senior bonus deduction applied. Your adjusted gross income after the deduction may fall into the range where this credit produces a real number. A VITA or TCE site can run this calculation at no cost. If your income is higher, the phase-out makes a significant credit unlikely. Your primary opportunity is in point 3. Step D, the catch. Schedule R does not automatically appear in most tax software unless the filer manually navigates to it or the software asks a specific qualifying question about age and disability. Many seniors complete their returns without Schedule R ever appearing in the workflow. Step E, one action right now. If you use tax software, search for Schedule R or credit for elderly or disabled within the program and navigate there manually. Complete the worksheet. If you use a preparer, ask specifically whether Schedule R appears in your return and whether the calculation was run using your 2025 AGI after the senior bonus deduction. Point 3. The amended return window. Recovering credits missed in prior years. Step A. Bust the misconception. Most seniors believe that once a tax return is filed and accepted, that year is permanently closed. It is not. The IRS allows taxpayers to file an amended return using Form 1040-X for up to 3 years after the original filing deadline, or 2 years after the tax was paid, whichever is later. An amended return can add credits, correct filing status, add deductions, and claim refunds that were missed. Step B. The actual rule in plain English. Form 1040-X is a 2-page form. It shows your original figures in one column, the corrected figures in a second column, and the difference, your refund, in a third. You attach any schedules required for the credits being claimed and submit. The IRS began accepting electronically filed amended returns in 2020. Processing time is typically 8 to 12 weeks electronically versus 16 to 20 weeks for paper. You can track your amended return at irs.gov using the Where's My Amended Return tool. Step C. Both groups. If you had part-time or self-employment income in 2022 or 2023 and did not claim the EITC, the 3-year window for amending your 2022 return closes with the 2025 filing deadline. Act before that date. If you filed standard returns in prior years without Schedule R, the same amendment process applies. If the Schedule R calculation produces a non-zero credit against your prior year returns with updated thresholds, an amended return can recover that going back 3 years. Step D. The catch. Amending a return to claim a missed credit reopens the return to IRS review. The amended return should be accurate and complete. If your original return had errors beyond the missed credit, correct them simultaneously. Amending to add a credit while leaving other errors in place can generate more correspondence than the refund justifies. Step E. One action right now. Pull your returns for 2022, 2023, and 2024. For each year, check whether Schedule EITC and Schedule R appear. If either is missing and you believe you may have qualified, use IRS free file fillable forms or a free VITA or TCE site to run the calculation. If the calculation shows a missed credit, file Form 1040-X for that year before the applicable 3-year deadline. Point 4. The free filing options that make this cost nothing. Step A. Bust the misconception. Many seniors who have not been filing or who have been paying a preparer assume that correcting or filing a return requires professional help or paid software. For the overwhelming majority of seniors watching this, that assumption is wrong. Step B. The actual rule in plain English. The IRS funds 2 free tax preparation programs designed specifically for seniors. VITA, Volunteer Income Tax Assistance, is available to taxpayers with income generally below $67,000. VITA sites are operated by IRS-certified volunteers and are located at libraries, community centers, and churches. Preparation is completely free, including amended returns. TCE, Tax Counseling for the Elderly Delt, is available to seniors 60 and older with no income ceiling on the base program. TCE specializes in exactly the questions covered in this video: Social Security taxation, pension income, EITC for seniors, and Schedule R. The largest TCE provider is AARP Tax Aid, which operates thousands of sites nationally and does not require AARP membership. Both programs can prepare Form 1040-X amended returns at no charge. A senior who uses either program to recover $4,873 in missed credits pays nothing for the preparation and receives the full amount. Step C. Both groups equally. There is no income level at which a senior over 60 has no free filing option. The comfortable retiree above the VITA income limit can use TCE through AARP Tax Aid. The lower income senior qualifies for both. Step D. The catch. VITA and TCE sites operate primarily from January through April 15th, and appointments fill quickly. Seniors wanting to use these programs for amended returns should contact their local site as early in the filing season as possible. Step E. One action right now. Go to irs.gov and search Vita Locator or AARP Tax Aid Site Locator. Enter your zip code, find the nearest site, and call to confirm they handle amended returns. Bring your original returns for the years you want to amend, your Social Security income statements, and any W-2 or 1099 forms showing earned income for those years. Every point covered in this video gives you a direct documented path to recovering money the IRS is holding for you, whether through a first-time filing, an amended return, or a corrected current year return. What follows is for the senior who wants to make sure this never happens again going forward, and for the senior who suspects their current preparer has been missing these credits consistently. Bonus 1, how to audit your own prior returns in 20 minutes. You do not need a tax professional to determine whether your prior returns missed a credit. You need 3 things: your prior year returns, the IRS Interactive Tax Assistant, and 20 minutes. The IRS Interactive Tax Assistant is a free tool at irs.gov. Navigate there and search Interactive Tax Assistant. Select the credit you want to check, EITC, credit for the elderly, or any other, and answer the eligibility questions using your actual income figures from the prior year return. The tool gives you a definitive eligibility determination and tells you the maximum credit amount you would have qualified for. If the tool shows you qualified for a credit that does not appear on your prior return, you have a confirmed missed credit and a clear basis for filing Form 1040-X. Print the tool's output and attach it to your amended return as documentation. This strengthens the filing and reduces the likelihood of follow-up questions from the IRS. Bonus 2, the one question to ask your preparer before you file. This year, if you use a paid preparer, one question will immediately reveal whether they are applying the 2025 tax law changes correctly to your situation. Ask this: did you apply the senior bonus deduction from the One Big Beautiful Bill and run Schedule R with the updated AGI to check whether I now qualify for the credit for the elderly? A preparer who has updated their training will answer that question immediately and specifically. A preparer who has not will give a vague response about standard deductions or look confused. If you receive an unclear answer, ask to see the Schedule R worksheet from your return. If Schedule R is not in the return and you are 65 or older, ask why. You are paying for accuracy. You are entitled to specific answers about specific forms. A preparer who cannot give them may be costing you money. Let me bring this to a single point that matters more than any individual credit or form number covered today. The IRS refund system is entirely reactive. Money leaves the system only when a valid claim arrives. The system does not calculate what you would have received if you had filed differently. It does not notify you when a credit you never claimed is sitting uncollected. It waits, and the 3-year window to correct a missed claim is the only opportunity you get. When that window closes, the money does not go somewhere else. It stays in the federal treasury permanently. The seniors who recover this money are not the ones with the most sophisticated returns. They are the ones who know which forms to check, which credits pay out as cash regardless of tax liability, and how to use the free tools the IRS has made publicly available to confirm eligibility. That knowledge is the entire difference between $4,873 in your pocket and $4,873 that disappears because the right form was never filed. The window is open right now. Do not wait. Before you close this, send this video to one senior in your life, a parent, a sibling, a neighbor, someone from your congregation. It does not matter whether they file every year with a professional or whether they have not filed in years because they thought they owed nothing. Both of those people are in this video. Both of them may be sitting on money they have never collected, and the 3-year recovery window on that money is closing. One conversation from you, a phone call to a free tax site, a form filed before a deadline. That is all it takes. In the next video, I am going to walk through the one Social Security claiming decision that permanently reduces your monthly benefit, a decision hundreds of thousands of seniors make every year without understanding that it cannot be undone, and the 3-year window the SSA does not advertise for addressing it. I will see you there.